Alright, guys. So when it was after 8:30 New York time, I saw this displacement to the upside. I was watching the volume imbalance. I needed to see a reaction before entering the trade. So once price reacted at that volume imbalance, I had to draw out my order block right there. I was watching. Okay, what are you doing? Are you giving yourself buys or not? I was internalizing price here. I needed that buys. I needed a spike, a reaction, a quick reaction. And once I saw a quick reaction of price below at that order block, look, just watch now. Watch, you'll see what will happen right there. Watch. That's that was what prompts me to say, okay, maybe the price is ready for me. I had to place my buy order, put stop loss below that swing low, anticipating buy side liquidity. At first, I was looking at this initial buy side that was printed at 7 o'clock New York time to 7 a.m. New York time. If you look, those relative equal highs, that was where I said, okay, I know market is going there. So when I did that, I said, okay, let's watch over. I now put my entry label. So indicating where my stop loss. Why I always put this is so that after I will come and review my charts, because I review my charts at the end of the day. After done trading, I go back to my business. Then after everything, at the end of the day, when I'm doing general review, I'll come back to the market. I'll check out what I did right, how would I have entered a trade well. So that's my volume imbalance that I've just indicated right there. So I was in this trade, I was looking at it, watching those reactions, because once you're in a right setup, you see the candle response. Each candle will respond to a kind of, well, I'm speaking personally because that's one of my confidence in trading. When I'm trading, when I'm in a right setup, each of the candlestick, for example, if I'm on buy setup, you now notice that every down candle will be supporting price to the upside, and the movement of each candle towards that buy side will now bring more confidence that, okay, I'm in the right setup. So trading is just understanding and anticipating your understanding your narrative, anticipating it. And when you're inside the trade, you need to know what you're looking for, a proof of a price supporting your narrative at that moment. So especially in me, I'm a scalper. I trade 1 hour a day. That's, I start looking for my setup from 8:30, mostly. Sometimes 9:30 I'm done, or sometimes 1 hour 30 minutes, at least 10 o'clock New York time I'm done. That is in my own time. I start looking for setup by 1:30, and I'm done in my own time because I stayed in Nigeria. In my own time, by 3 p.m. I'm done. So I was in this trade looking at each reaction at the fair value gap. Why I wrote that IOFED, it stands for Institutional Order Flow Entry Drill. I wanted an immediate spike after it has entered that fair value gap, but that didn't come to fruition. I just ignore it. I say, okay, since it's pushing price to the upside, I'm still on the right side. The fair value gap is the price is at now is previous day 9:30 first prints of fair value gap. So I was looking at price reacting inside there, and once it kind of disrespected that fair value gap, I said, okay, I'm still on the right track with price today. I was watching what is going to do inside that fair value gap. I was watching, keep watching, looking at the volume. There's a small volume imbalance at the left. Those relative candles, black candles, there's a volume imbalance. My eye was there? How will price react there? Will it use that to support to the upside, or will it use that and come aggressively to the downside and come back and taste this my other block proper? All of these things, this was what was going through my mind. That's what I was thinking, was what I was like while in this trade. So that's one thing about trading. You these things must be there. These PDR rays, because I trade ICT concepts, and these PDR rays are things you look at in each price movement. How does price react to it? How does price react with it? How is the movement of price within this range? So my general focus right now was that fair value gap that was printed, the first fair value gap after 9:30 of yesterday. I was looking at it. What is it going to do? I had to draw out my expectation. Say, okay, if price comes here, this rejection block, I'm taking something off. That is my TP1, and I annotate that as my TP1. Boom. So even that previous day's low, the one I annotate PDL, right above where price is now, I was watching it. I wanted to take something off there as well. So I was watching. The high there was my TP2, and my final target was where I kept my initial buy side liquidity. That's my final target. So when price was printing strongly down, I was watching the consequent encroachments of that previous day 9:30 first print of fair value gap. So will it support price back to the upside? And when it's ignored it, I say that means probably it's coming back to this first fair value gap, the IOFED, that's institutional order flow entry drill, the first fair value gap after I've entered. I say let me watch what price will do there. I had to watch it, and I was also thinking, is it coming back to the volume imbalance where I entered previously? Is price coming back there, or will he use this IOFED, that's institutional order flow entry drill, to move to the upside, or is it coming back again to my entry point? And where I would have closed it, if it could come back and break that other block, I will say immediately price begin to spike to the upside. Say that means using that IOFED to move to the upside. I was looking also at the daily time frame where price is. I know it's inside daily fair value gap. I say I'm all in. My PDR rates are correct, so I needed at least profits to hit TP1 to move my stop loss to break even. So that was what happened. I was watching the PDL, that's previous day low, the low that was formed yesterday, and when once price reached there, I had something off the market, some partial profits.
Good afternoon, can you hear me?
So it was boom, that was taken out. I had to reduce my stop loss at least, and I annotated that as well. Partial profit taken, risks reduced. So equally was focused at the consequent encroachment of that fair value gap. See how it is support price to the upside as well. So you see how that CP2 hit and I was okay. I moved stop loss to break even. It was done for the day. So please, if today is your first time of being with me on my YouTube channel, I really like you subscribe, like the video, and share with your friends. Thank you so much.